On one hand, we have Metro Manila condos facing an all-time high in terms of oversupply. And on the other hand, we have the S&P 500 fumbling in these last few weeks. So if you're like me and invested in both, this is definitely not a great time for you. But as they say, this is but a temporary setback. In the grand scheme of things in long-term investing, these little blips shouldn't matter. But of course, it's hard to gain that long-term perspective as we are living through it right now. So today, I'm taking this opportunity when the markets and our real estate is down to compare the outcomes, the return of an investment on one hand in real estate, specifically my investment through a BGC condo I've done in the last 10 years, and on the other, what this money would look like if it were just invested in the S&P 500. Yes, I've done this video before, but we are tweaking it a bit. This is a 2025 version of that video from last year. I remain challenging the norm if real estate is in fact the best investment, or should you just invest in the S&P 500? This is what we'll look to uncover, so let's go! But before anything, if you are new to the channel, hi, I'm Mark, it's nice to meet you. In this channel, I talk a little bit about lifestyle, but I mostly talk about business and investments. So yes, my biggest investment so far in my life is my condo in BGC. I bought this in the 2010s. Generally speaking, and through the optics, I think it's the best investment. But I've also talked a lot about the S&P 500 in this channel. I've made a lot of great returns on it. And while my investment in the S&P 500 is perhaps not as big, my returns from this investment has been encouraging enough for me to want to compare this to my real estate investment. Again, I've done this video last year, but I was actually looking at the S&P 500 from a broader standpoint. I wasn't looking at it from a different bank UITF that was offering it. So when I looked at it and saw that I could actually run the performance of the BPI US Equity Index Feeder Fund in the last 10 years, it actually got started in 2014. I saw that this might be a better comparison and update this video. So to start with, let's look into my investment in BGC. I invested in Fort Victoria, which sits at the main thoroughfare of BGC, which is 5th Avenue. To be able to afford this, I actually availed of a housing loan. I took on a 15-year mortgage, so I'm still just about 2/3 of the way there. And even before the housing loan, I availed of the unit during their pre-selling period, so it was a little lower. Anyway, what's important here is that the average amount that I'm shelling out for this is around 35,000 pesos. Obviously, this is not a fixed amount. I'm just pegging it at that. This actually includes the fire insurance as well that I'm paying through the bank. Having spent the amount of 35,000 pesos monthly over the last decade, the total amount that I spent for this all the way through March 2025 is now at 4,480,000 pesos. Looking at the going rate at BGC right now, they say that it's 300 to 350,000 per square meter. So that's what the sellers would say. So for my 40 square meter condo unit, I think I'd have to price lower, maybe at 250,000 per square meter. So that gives me a selling price of about 10 million pesos. So I've put in nearly 4.5 billion pesos, the selling price right now at 10 million pesos. Of course, I'm not yet done with my loan, not factoring in the loan yet and other expenses. That 10 million pesos with my 4.5 million investment will give me returns of more than 100%. Again, we are not yet factoring all the other expenses yet, so let's park that. So I looked at the performance of the BPI US Equity Index Feeder Fund. They actually got started in August 2014. Full disclosure, I actually started buying into my condo unit a few years before that. I've actually just pegged August 2014 as the peg start for the purpose of this experiment. So again, what we're trying to figure out is if an investment in the S&P 500 would actually beat my investment in real estate. So while this may be theoretical, I am actually pegging 35,000 pesos also monthly in the S&P 500 through the BPI US Equity Index Feeder Fund. I've actually looked at the NAVPU, the net asset value per unit of this BPI fund. So starting 2014, I pegged the 5th of the month wherein I will be placing the investment. So for the 5th of every month, I was looking at two things. Again, the NAVPU, the net asset value per unit, and also the dollar exchange rate, because investing in this fund is actually through dollars. So you do get some appreciation when the peso declines and the dollar appreciates. Having the net asset value per unit and the dollar exchange rate, I was able to compute the number of units that I would be able to buy with the amount of 35,000 pesos. So at the start, with that 35,000 pesos, I was actually buying 8 units each time I invested. And by the end of this data, in March 2025, the number of units that you can actually buy with 35,000 pesos is now just a little under 2 units. So that's a preview of how much appreciation the S&P 500 had in this short amount of time. So putting all that together, the amount in pesos is 4,480,000 pesos again. So this would be the same as the investment in the BGC condo, and just over $88,000 in terms of its US dollar equivalent. After over 11 years investing in the S&P 500 fund, the $88,000 that we've put in comes out to $176,536.70. So that gives us returns of $88,534.35. This is a return of 100.6%. So this actually factors in the trust fees that BPI is charging. That's in terms of dollars. When you actually look at it in terms of pesos, it's even much higher. The investment of 4,480,000 pesos comes out to 10,126,000 pesos. The gains are 5,646,145 pesos, and those are returns of over 126%. So you'll see here that the returns from the S&P 500 is in fact really huge. And you might be thinking, that's great, but I'd still rather invest in real estate. I'd still rather have something that I can touch, that I can feel. So that's what we're gonna look at now. Let's see if the investment is in fact worthwhile. Again, the value of my BGC condo may be at 12, 13 million, but if I wanted to really part with it easily, you would have to undercut the market. Perhaps it's not even as high as this, but just to peg it at a round number, I am using 10 million as the value of my BGC condo right now. Let's now factor in the other expenses that I have to consider. So at 10 million pesos, we of course have to pay a capital gains tax of 6%. So easily 600,000 pesos will be off the table. And since I am still 2/3 of the way through to completing my housing loan, I have a balance of 2.1 million, which of course I'll have to pay the bank when I exit the loan early. And of course, we are still paying our annual real property tax, the RPT. So on average, I'm paying over 7,000 pesos for this. That comes out to 77,000 pesos. On the association dues, so in terms of this experiment, I actually put 1 year as the pre-selling period, while the next would be the turnover already. So in 11 years, I started paying association dues of over 5,000 pesos monthly. So in 10 years, I would have paid over 600,000 pesos. And in terms of renovation, fixture, appliances, my unit actually came bare, so I did spend a bit more than others would. Perhaps you have a unit that comes fully furnished, fully decked out already, so good for you. But in my case, and over the course of those 10 years, I pegged the amount of 800,000 pesos that I've provisioned here in terms of, again, renovations, fixtures, appliances, leaks, what have you. Deducting that from the 10 million selling price, the amount that I'm left with is 1,343,000 pesos. That is just a little over 10% of the returns when you compare it to the S&P 500, which has great returns of, again, over 100%. But of course, this assumes that I was actually living in it. Since we're talking about things on an investment level here, let's say we actually got a renter for a place. Let's say it was for Airbnb, or perhaps it was for a long-term rental. Let's assume that in the past 10 years, it was fully occupied, and that the amount that we're earning from it actually cancels out the monthly amortization, which is again 35,000 pesos. So for the rent income in the last 10 years, that actually comes out to 3,255,000 pesos. With this 3.2 million rental income, and from the proceeds of the sale minus the expenses, the total return from the sale is 4,598,000 pesos. This is actually more comparable now to the S&P 500. This is a return of 102.63%. This is comparable to the US dollar return of 100.6%. But of course, we are looking at the peso part, which is higher at 126%. So what does this all mean in terms of your return of investment? Well, we see here that the returns from the S&P 500 actually can match that of a very good real estate investment. This is even me talking about BGC, and I would think a lot of us consider BGC as the Holy Grail of all Metro Manila condos, or all condos all over the Philippines. My returns are actually quite good, and they are still paling in comparison to the S&P 500. I was fortunate enough to come into BGC a little earlier. Now we're seeing the benefits of that. But I know that a lot of you guys have invested in other CBDs or even secondary areas around Metro Manila or around the Philippines. So those returns perhaps may not be as good. Perhaps that's why I'm worrying about all these investments in condominiums. Right now, we're seeing that yes, there is an oversupply. They say that it really won't affect the main CBDs of Makati and BGC. But anyway, I'm feeling the effects of that as well. So is investing in stocks, mutual funds, ETFs really better than real estate investing? Well, again, as I told you earlier, it's not as easy as that. Investing in real estate does give you something that you can really touch and see the fruits of your labor. But yes, it does come with a lot of work. But of course, not all real estate is created equal. I'm just talking about one type of real estate investment. And in this case, it's failing in comparison in terms of returns to global markets. Of course, real estate coming with some hassle also comes with the benefit of you being able to fix it up, to really being able to utilize it and perhaps even selling it at a better amount. You can fix it up, deck it out as much as you'd like, and really fetch for a good selling price if the market can afford it. But in terms of ease and convenience, I think I'm really looking at the global markets, especially the S&P 500, as a means to maintain and grow my income. One of the biggest perks of these funds is that within 5 to 7 days, if you really wanted to exit your investment, you could. You're able to liquidate your investment, whether in part or in full. That's actually a lot of flexibility. While when you are trying to dispose of property, of real estate, you might actually sit on your property and wait for it to get offers, a lot of showings. It may take you weeks, months, or even years to get a good price. So, of course, this upside of these types of assets that are very liquid is also precisely that. It's a lot more tempting for you to touch. I mean, you would have to have a lot of discipline for you to say, no, I'm not touching this amount of money. There may be an emergency, there may be something that you need that money for. It's so easy to liquidate it, and perhaps that's also a challenge when you have these types of investments. But of course, access and liquidity are always going to be a good thing. So one of you actually pointed out in my older video that the 800,000 that I pegged for renovation should actually be pegged into the investment as well, and not just put there as an expense. Well, yes, that is correctly put. Technically speaking, the amount that I've put into the renovation should actually be placed in the investment of the S&P 500 as well, if I was really looking at this from an apples-to-apples comparison. But for the purpose of the fixed amount that I'm putting in, that's why I just placed it at 35,000 pesos monthly for both. But yes, if I really wanted to have it as the most accurate comparison, then the 800,000 gets spread out in the first 1 or 2 years of the investment. So in that way, that would actually work in the favor of the S&P 500 again. It would really beat out the real estate competition. That's just another perspective that I wanted to share with you guys as I aim to do this update video. When I got started in investing in these funds, it was really parking some funds until I find the right real estate investment again. But seeing these returns, I can't ignore the fact that I see the S&P 500 as just performing better. In fact, this has gotten in the way in my consideration of my next real estate purchases. I still haven't done them. I remain with my BGC unit as my only real estate investment for now. So all this talk, these videos about the S&P 500, this has really come to play in my thinking as well. So what do you think? Does this change your mind about real estate investing or maybe just condo investing? Let me know in the comment section. If you've liked this video, please don't forget to like, comment, and consider subscribing if you haven't already. Thanks again for watching, guys, and happy investing.